Hey everybody, Chuck Barone. Tuesday, July the 5th, 2023. Hope everybody had a good, happy, fun 4th of July. Fireworks and barbecues and swimming pools and fun with the kids, man. I remember when my boys were younger, it was so much fun on the 4th of July. It was just like the hugest holiday for the guys. It was so much fun. Anyway, a great holiday. I hope everybody enjoyed it. Markets today. Well, let's look at these markets, guys. An interesting day. They released the Fed minutes from their open market committee meeting today. According to the data I had, it was supposed to be on Friday, but here we get them already. And it kind of, in my mind, really was nothing. I'll talk about it here in a little bit, but the market reacting to it, anything that I guess, this market is so sensitive to anything the Fed says or does, even if it's really not new news, the market reacts to it anyway. So the market down today on the news, the Dow losing 129 points, 34,288 on the Dow. The S&P down 8 points at 4,446. And the NASDAQ losing 25 points, 13,791. So all in all, not much of a day in the stock market. The market is just waiting, I think, now for really anything significant. This day-by-day trading we're seeing here, where the markets are up 100, down 100, it's literally on a treadmill to nowhere. I think that sooner or later we're going to get some news one way or the other on this recession. It's going to be confirmed it is or isn't. And then you'll see the markets really move one way or the other. Bond market today, again, reacting to this Fed information. Yields up today, especially on the 10-year. The 10-year jumps 9 basis points today to 3.94%. The 2-year up just 1 basis point at 4.95%. So the inversion kind of narrowing down, still more than 100 basis points, but surprisingly, you're going to see the 2-year probably get up over 5% and stay there, especially with we know there's another rate increase coming at the end of this month, probably priced in, but nothing is ever priced in 100% until it happens, right? So bond yields up, good news for savers. The dollar today up very small, 103.35 on the index. A good thing about the dollar of that number, though, holding 103. So the dollar looking pretty strong, still the champ against the world's currencies. Obviously, the dollar being up today a little bit has metals in a little bit of a flux today. So metals mixed with gold falling $9.60, $1,916.10 for an ounce of gold. While silver rises 17 cents per ounce, $23.12 for an ounce of silver. So, metals are holding their own. I'd like to see these numbers a little bit higher, but in the face of the dollar kind of having a rally and more data, news, and Fed speak, metals holding their own, holding up. Oil today up pretty nicely, actually up $2.07 per barrel. West Texas Intermediate settling at $71.86 per barrel. Market wanting to make a big deal out of this. Guys, I think we've been spot on about oil. It wants to be in that trough between 70 and 75 per barrel. So this move today back, from under 70 to in the low 70s, we know this is a big nothing burger. Because once this oil approaches $75 a barrel or even breaks through, we know it's going right back down to 70 and maybe breaking through to the downside. It's just the way it's been trading. And until we see anything different, we got to figure that that's probably the trading range it's going to stay in unless there's any kind of real news about production or supply or something of that nature. Bitcoin today down small, down $262, 30,465. I think there's some profit taking there. I think Bitcoin actually, if they can get it done, Blackstone, Fidelity, and all these groups wanting to put together this ETF on Bitcoin, that's going to make Bitcoin go up pretty significantly, guys. So I think this is certainly, if you're a crypto player and have a little bit of money to invest, if you believe these exchange traded funds are going to become a reality, probably not a bad time to get a little taste of this stuff. All right, so let's talk about news today. The big news, of course, that moved these markets was these Fed minutes they released. I got to tell you guys, to me, a big nothing burger here. The market reacted to it, but there was really no new news. The same stuff they've been saying, we've been talking about. Keep rates higher for longer, no rate cuts this year, 2 more increases likely, although 2 of the Fed governors did vote for no more increases this year. A couple more saying 1 more, which we believe will happen in July. So interesting, there's a little bit of disagreement on the Fed board, but the bottom line is they're going to have that increase this month, and we'll see. The data will drive them then to see where we go for the rest of this year. Also mentioned that they were data sensitive. They paused. They wanted to see what, they've really raised rates very aggressively, more aggressive than they have over the last 40 years, guys. So they want to get a little bit of an idea of how the market's digesting these rate increases. I think the market's still more in shock than digesting these increases right now. I don't think people really have had time, unless they're in the market for real estate, to understand what these rate increases are doing to payments. So very, very blah, 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 yada, 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 nothing new here on these Fed minutes. So the market reaction to those today, and the way they were talking about them like it was something important or something that we didn't know. I got to give, you got to give Powell, if you're going to criticize the hell out of him, which we all do, you got to give him a little bit of credit where due. And the guy has telegraphed exactly what the Fed was going to do. The market has known what, there have been no surprises, guys. Okay? And I don't know why the market wants to factor in a surprise now. Powell has pretty much told us what's going to happen the rest of this year. Now, unless he changes that, he says it himself and changes what he was saying, we're going to see 2 more rate increases this year. That's going to bring that overnight rate up to about 5.6. And hopefully that will be enough if we can keep these inflation numbers lower than that 5.6 to bring inflation down to their target without having to raise rates into the 6s or higher. And that's my hope, with a somewhat selfish motive, I have to admit. Being in real estate, I know there's a lot of buyers who want to buy real estate here in Vegas and cannot because of where rates are. I know a lot of people who want to sell real estate in Vegas cannot because of where rates are. So I would like to see rates get more reasonable and let this real estate market continue, get back on track. I think that, real estate is the foundation of the economy. Real estate, in my opinion, is the foundation of personal wealth. I like real estate, especially, now don't get me wrong, I'm not talking about investment real estate here, okay? I'm talking about the house you own that you live in, your primary residence. A nice vehicle for building money, building wealth, building equity, because it happens very quietly, you're not seeing, it's not in front of you like your bank balances are, your portfolio balances or things like that. You're thinking about the value of your house, and you might even think about your equity position in the house from time to time, but it's not money you're going to easily tap into. We haven't seen the frenzy of that yet, where people tapping and spending their equity like they did back in, the later 2000s, 2007, 8, and 9. But I digress. Rates, we know where they're going. We know what Powell's going to do. So let's just prepare for it. We're going to get another 0.5 point this year. We're not going to get rate decreases this year. Not going to get cuts unless something very dramatic happens. And of course, we'll see that coming from a mile away. All right, other news today. I was reading a quick analysis today that I really thought was interesting, talking about commercial real estate, which we have told you guys is a disaster. It's just starting to happen right now. This analysis was saying that commercial real estate will not start to recover until 2040. So apparently pretty bearish on commercial real estate. Now the case was high rates and work from home have caused tons of vacancies, tons of landlord trauma, institutional investors starting to walk away from properties rather than try to refinance them. Of course, lenders reluctant to lend. So those are, with rates higher, lenders reluctant to rent, borrowers walking away. That's a recipe for prices coming down. And that's what's going to happen in commercial real estate. You're going to get more and more defaults. I was reading here, this is what they said was interesting. It said, right now, $64 billion in commercial real estate is basically already foreclosed or a distressed sale is happening, okay? When you hear foreclosed and distressed sale, that always means reduced prices on those properties, okay? They also went on to say that another $155 billion in default or forced sales coming very soon. While that is a gigantic number, that's going to put pressure everywhere on these small regional banks. If these defaults really happen, you're going to either see big negotiations with these landlords with big paper losses. One way or the other, banks are going to have a tough time with this if this stuff actually does come to pass. $220 billion worth of commercial real estate defaulting. Who's going to buy $220 billion of commercial real estate in the United States right now? Fascinating stuff. I mean, again, this is just a simple analysis here, but the points he makes are true. I mean, there's no sign whatsoever on the horizon right now of a recovery in commercial real estate. Only more bad news coming soon. It's like we hit the iceberg. We know the ship is going to sink. It just hasn't sunk yet, right? So we'll be talking about commercial real estate and residential real estate a lot on this show. We'll keep you guys posted. Last but not least, one of my favorite pet peeves, car prices, new cars, car payments. So I was reading today, the latest update. Car payments are still going up, guys. Now, over 17% of new car payments over $1,000 or more. Now, pre-COVID, before the COVID, the pandemic and the shutdown and everything else and the supply chain issues and everything that trickled after, this number was 4%, was over 1,000. And I'm sure that was the Highline stuff, your Mercedes, your Land Rovers and fancies, right? 17% tells me now, you're getting middle of the road cars, super expensive. It said that the average price of a new car right now, $48,500. So what's happening is people can't afford new cars, they're going to used. People don't know how to buy used cars, they're driving prices up, supporting prices. Even though used car prices are coming down as more people suck it up, $1,000 payments, still elevated from where they should be. And a weird anomaly now. So you have interest rates, just to show you the effect. Interest rates affecting real estate, as we've explained, limiting the supply because sellers don't want to sell and give up their 2.5% or 3% mortgage. So that's impacting real estate in a big way, keeping prices elevated. The opposite of what they want to do. Now we see cars. Higher prices, higher rates, higher payments. Propping up used cars, keeping those values elevated higher than they should be. And another weird anomaly, just like with real estate. So anything remotely interest rate sensitive right now is having this weird stuff go on. Anyway, guys, that's it for the day. Not a lot of news to talk about, so just some fluff here for you guys. I hope you enjoyed the show. As always, we appreciate your support. You guys mean the world to us. If you like what you're hearing, please hit the like button. It helps our algorithms. It helps get the show in front of more people. We get more views that way. If you have questions, hit me up in the comments section. Of course, if you haven't already, please subscribe to the channel. Make sure to check your bell. Ring the bell for your notifications. Be back tomorrow to wrap up. Tomorrow we'll get some new real data tomorrow, unemployment numbers and some interesting stuff. We'll be here to bring you guys the news you need. Till then, take care, guys.